The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And yes, they've got the transition loan. Ironically enough, the transition loan right now, buying, cross-collateralizing your departing property, the home you're looking to sell that you've got equity in to buy a new property, the rates on that are pretty much the same as what a conventional rate is right now, even though it's a portfolio product. Fascinating watching that because of what the market is doing, and we're going to talk about that in just a minute. But every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. This does not tell us anything about points paid, points received, or APRs. They just give us the locked rates with consumers across 42% of all mortgage transactions nationwide. Yesterday, conforming loans locked at 7.695. Jumbo loans, 7.861. FHA, 7.327. USDA, 7.461. And the best loan on the market for those that earned it, that would be the VA loan at 7.312. Don't forget, those are the locking numbers. If you've got the right strategy, we're still seeing loans locking in the mid-5s and the mid-6s, but you got to have the right strategy for that. We do talk about our thoughts on the markets every morning. We send out usually a one-page, two-page little synopsis. Go to rsrmarketminute.com, rsrmarketminute.com. You can register for that. It is totally free. We send that out to you. Let's take a look and see what the markets are doing right now. The S&P 500 is down 31.79. The 10-year Treasury, if my screen will refresh, earth the screen, come back, please. Earth the screen, come back, please. There it is. Okay, we got the 10-year Treasury is up 7 basis points. That's pulled back a little bit. Mortgage-backed securities are down 39 basis points. That one's come back a little bit, but it's still very, very high. Ow! Why? Well, let's take a look and see what's driving the market. Signs of impending layoffs. I told you a little bit about that one in the opening segment. The Worker Adjustment and Retraining Notification Act, WARN, protects workers, their families, and communities by requiring employers with 100 or more employees to provide at least 60 days notice, advance written notice of plant closing and mass layoffs affecting 50 or more employees at a single site of employment. Recent data has shown significant increase in WARN notices, and the chief economist at Apollo Management feels that it predicts that unemployment claims in October will rise to a level between 250 to 300,000. Remember, we're only at about 200,000 right now. Housing starts, that's a big issue. Housing starts rose 7% in September to 1.36 million unit annualized pace. That's just the starts. I got to finish them, which was lighter than market starts, are now down a little over 7% from last year. Single family starts, most important, rose 3% to 963,000 units. Building permits, which is the future supply, fell 4% to 1.47 million units. That's down a little over 7% year over year. Single family permits rose 2%. Now remember, we need about 2 million new units every year just to stay flat. So when we talk about building 1 million units, not helping a whole lot. That's what's driving the market. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.